And now, broadcasting from Titletown, USA, here's Joe Simon.
Welcome again to another rousing Joe Simon podcast. And we've got a special guest, our subject matter expert, Ryan Long, who will be stopping in just a minute. We're going to have a broad and deep conversation around what in the world is going on this hour with gold and silver. Let's take a look at the agenda quickly to see what we're going to stay focused on, because you know what, friends, there is so much that I want to talk to you about. I've got a lot of questions. I've been meeting beginner or interested people in gold and silver and pre-33 coins. And then I've also met what I'd call advanced class members, people that have been in gold and silver for a long time. They may even know a little more than me, probably not Ryan, but me. And it's a very interesting time. It seems to me like everybody wants to talk about this. So that's why we focus on the agenda, because we're going to keep it, fine and tight today. But here it is. What we're going to focus on is the big four. Your dollar's value. We're going to look at a slide that reflects that and tries to make it a little easier. Number two, what's going on a global front? This is a hot topic. What's going on with gold and silver around the world with the big purchasers, where the money's going? We can always kind of read the tea leaves when we see that. Number three, physical gold, silver, pre-33 coins. Ryan Long always has an interesting little quick story to talk about what it looks like when you have gold on paper versus really gold in your hand. So we'll leave that story up to Ryan. It's always fun to hear that one. And number four, qualified money, IRAs, Roth IRAs, 401ks, inherited IRAs. Can we move that to physical gold and silver? But more importantly, can we hold it in our hands like they say in some of the commercials? So we're going to get into all of that today. So let's enter in. Here's Ryan Long. Hey, Ryan, welcome back.
Hey, Joe, always great to be back with
you. Little studio audience joining us here today, apparently. But we off mic had some great discussions earlier. We had a great kind of pre-show planning lunch over in the northern portions of Florida, in the historical, I believe it's the oldest city in the United States, St. Augustine,
Yes,
Florida. Is that correct, Ryan?
That is correct. Good old St. Augustine. We love it.
And that's where your world headquarters are based, and there's new developments going on there. So I was blessed and honored to spend some time with you, hear the insider on where the organization itself is going, and all good stuff like that. But let's focus on the big thing today, and what we are seeing is gold is making history. Gold is no longer an alternative reserve asset. It is now a major reserve asset. Let's bring up that slide. I'm going to throw that one right at you, a quick one to get things started today, Ryan. And there's this one and one more coming up that really sum it up. But, we've talked about this before. This is kind of a real world look at what's happening here. Can you kind of explain what we're looking at there in real simple terms?
Yes, absolutely, Joe. I love this slide, and we've had to obviously change this here just this last year. The whole premise of the idea of this slide is a silver dollar. One old silver dollar that still is and used to be legal tender currency buys you the dollar's purchasing powers version of 10 gallons of gasoline all throughout history. Doesn't matter if gasoline was 50 cents or $3. A silver dollar would rise and flow based upon keeping purchasing power consistent. Here we are now with the acceleration, the de-dollarization that's happening globally. And you can see what a silver dollar is doing now. It's not only keeping up with your purchasing power, it's increasing your purchasing power, Joe. I've even took this slide a step further here this year, and I say not only does the silver dollar still buys you 10 gallons of gasoline, but it also buys you a very nice steak dinner as well.
Nice. Let's go to that next slide. This really, we came across this one the other day, and that one really screams for what I like most about this is a lot of people, there's so many things to follow. It's very hard to follow the global forefront on this for a lot of people. We're all very busy. A lot of people don't do what you do 24/7, 365, Ryan, and you had for so long. I represent a lot of different solutions. Gold, silver, pre 33 physical is all one of many tools I have in my tool chest. But this one, if you're somebody that really is working hard at moving forward in class and trying to understand what in the world is going on, tell me what I see here, Ryan. Why is this an important slide right now?
Look, Joe. This is just simple dollar de-dollarization that's happening all throughout their globe.
Yeah.
When you see the world's central banks, the holdings of the central banks now exceed the United States Treasuries, which that you look at your slide, Joe. That hasn't happened in decades. The world is telling you something that we were propped up and fortunate in 1971 to be a part of the petrodollar trade, meaning countries have to trade oil with our United States dollars. Look, Joe, just recently with this Iran war, China buys 90% of Iranian oil. Okay.
Okay.
And Iran is now exclusively trading oil in Chinese yuan. They're only allowing ships to pass through the strait if they're not nominated in Chinese yuan. This global shift is happening, and what that's for layman's terms of what that happens to you. If you find yourself a saver in dollars, you're losing.
Yeah. And, let's talk about some U.S. numbers here for a minute, government numbers, as we like to say. So our debt now is at 39 trillion. We hit that in record time, an increase of 2.8 trillion with a T in 14 months. In 14 months, we're burning money here in the United States. And I don't mean to make this a negative podcast. It's not going to be negative. The podcast here, and what we always try to do is create strategies for you to pick up on and go, does this fit where I'm going? I don't understand it. I need to find an advisor that can kind of walk me through it, and then I can make educational choices. And that's really the focus of what we're doing all the time. But the concern I have personally is that rampant speed that we as a country have now accumulated in debt, $2.8 trillion in debt in 14 months. Even the CSO, let's call it the United States Accounting Department, didn't project that kind of debt until 2030. So something is happening. We're talking about some of this global shift that's taking place. Is it inflation? Is it recession? What say you, Ryan, on that question?
Look, the environment we're in right now is bursting the word inflation, right?
Mhm.
If you have in the shift of gold versus treasury holdings globally, treasury holdings are essentially United States debt. If countries
Yep.
and central banks are not purchasing our debt, our status quo ends, and that's when you see massive inflation. I don't care if it's 3%, 6%, 10%. If no one buys our debt, our dollar just becomes worth less and less, and that's the paradigm shift that we're realizing right now.
We have a slide here called different types of gold and silver. Let's take a look at that. Everybody likes to talk about gold. I love gold. You see gold all over. That's something I heard about from way back. Gold has a history that goes back to Roman times, not to repeat what we talk about, but there's something fascinating taking place with silver. What are we seeing here on this particular slide when we bring up the physicalness and then the ETFs? And please tell us your favorite story about making it really simple and the difference between the two.
I always love to use this illustration, Joe, that if I was to head down Interstate 95, hit Cape Canaveral, I'm boarding a cruise ship. It happens to be the Titanic, right? We know the history of what the Titanic has done. The crew member comes up to me and says, "Hey, Ryan, we know the history of this vessel. I've got two options for you. The first option is a life preserver you can have right now to put around your neck. And the second option is a certificate saying you own said life preserver." Right? I don't know about you, Joe.
It's a good certificate.
It's a good certificate, but I want the real deal, because I don't want somebody taking claim to the certificate that I own as well. That's the problem we have here, right?
Yeah. Yeah. And being, I know you're a Minnesota boy and I'm a Wisconsin boy at heart. We could take the Titanic out and make it real time and talk about the Edmund Fitzgerald for some of you people who grew up in the 70s and 80s and see Gordon Lightfoot for the rest of that story. But the point is, it's a sinking ship. What do you want? Something that's going to save your life immediately? Or you got to grab the piece of paper and run to the guy that can cash it in and then do it for you? Both, by the way, and I know we have people that are following going, what are you saying? My ETFs are junk. I am not saying that. But what I am saying is we live in different times today. And we always, every time Ryan and I get together and we chat here, this is a diversifier. And here's another question for you, Ryan. I think from my perspective, it's a different time because we've actually lived through a couple of years where the market's doing fabulous and so is gold and silver. Explain that one.
Well, Joe, there are times that they play inverse of each other, right? There also are
Yeah.
times like we're in right now that they're both going up in tandem. And a lot of that is the whole reason of what you mentioned, the $39 trillion of debt, adding $2.8 trillion of just not only a debt, but also monetary supply. There's many more dollars chasing few and few assets, right? Why are your home prices doubled since 2020? It's because they keep printing currency, right? So there are times that that's why you have to be well diversified to keep up with the government spending, the treasuries that are not being purchased. But you look at Joe that you mentioned that previous slide we talked about, and the physical versus the paper that we're talking about as well. I tell you this much: the central banks, they're not buying an ETF of gold. They're all buying the physical to deleverage their risk. That's what it comes down to,
Yeah.
is deleveraging risk.
Let's go to the next slide, Christian. And this is really sort of a game changer for some. I've been talking about pre-1933 coins now for a solid year, in particular, more so than ever in my 30 plus year career. It's fascinating to me personally. It's a collectible, but there's investment value to it. Ryan is an expert in this, so we're really going to take this time and space, especially for maybe you first timers watching this or tuning into this particular topic. We want to drill down on this because I think this might be one of those secret weapons, that special tool that you want to think about as you think about diversifying in your hard-earned assets, either qualified or pre-qualified, non-IRA type money. So, Ryan, just walk us through your thoughts and experiences with this subject that we see before us right here.
Well, I love how you serve this podcast up, Joe, of saying that this is not going to be a negative conversation. This is not a doomsday type of approach. So I like to debunk that just because we're dealing with coins that are what we like to say 100% private, that doesn't mean we're putting our tinfoil hat on and heading for the Smoky Mountains and being in the hills there. The idea, I mean, if you're looking at all gold and silver, Joe, and not all gold and silver is created equal. There's right and wrong ways to do a lot of things. And so for our experience of the last several decades of doing this, there's a right and a wrong way to own physical metal as well. When we like to say this is recommended for money outside of retirement accounts, it's because we cannot place these. I got one in my hand right now. We cannot place these coins inside of a retirement account because the retirement account, the government wants to track you so they can tax you. Right. So the whole concept of the non-IRA coins, you get physical possession of it. It's in my opinion, the best way to build generational wealth. It's like having that proverbial cash under your mattress that no one knows you have. And I mean, here's that bullet point, Joe. No 1099s, right? When you enter this market and when you exit this market, there's no government involvement that's involved. Now, that doesn't mean we're evading taxes. You're supposed to pay to Caesar what is to Caesar, right? But when we're talking about building generational wealth, this is an asset class that no one knows what you have. It passes hands, it passes generations. It's huge that way, Joe.
So there have been some clients we've worked with together. I guess if people said, well, how do you and Ryan make up your business relationship? What kind of, sounds like you guys are on the same team. Well, we are on the same team, but Ryan specializes. I guess the best way I could say this is, let's use the old dentist analogy. You go see your general dentist for the general needs, and you go see your orthodontic or your specialist for special dental care needs. Ryan's a specialist. When we sit down and talk to a Main Street USA business owner, and he or she is looking for ways to really build something for themselves after their time with their great business is over with, besides realizing possibly their most volatile and largest asset is their business, there's other things they like to build around that. So that's a conversation that can be had. People that are younger sometimes might have a more difficult time to understand what this might plug into, but I'm finding that interest is coming to the forefront too. But perhaps the sweet spot might be somebody that's really close to the retirement goal line. You're concerned about the fluctuations more so now than ever, in maybe your personal largest asset is your 401k. By the way, we can have a great discussion and debate about your home being your largest asset. So your retirement is all tied up in your home. I've had great developers that built beautiful homes as clients before. And let's go back to 2006, 2007, 2008, 2009, and they have changed drastically since those times. Check your chart to see what happened to the market and the home development business with let's call them specialty homes, multi-million-dollar homes. It was shocking and very fearful times. So I will talk to you one way and down the other about your home being where all of your life savings is. It's about diversification, but that's for another day and another time. So here we are. We're talking about pre-33 coins. Ryan specializes in this. His retired father taught him the tricks of the trade, so to speak. Ryan's picked up the torch, carried that forward for several successful years. What would that feel like to me, Ryan? Do I buy silver? Do I buy gold? Do I buy a blending of it? What does that feel like? How does it? So my money goes off to you. What happens from that point on? Give me some kind of cadence?
And Joe, that's where the conversations that folks have with you when you are able to lay out their entire roadmap of their retirement, right? Everybody's roadmap is different. Everybody comes with different sizes, different qualified money, different non-qualified money. And that's the importance of sitting down with an advisor like Joe to map that out. But what I like to say, Joe, is gold and silver is used as a tool, a diversification tool, but also a way to build generational wealth. It's not just about preserving purchasing power in retirement anymore. It's doing that and then some, right? So
Mhm.
when you look at your overall wealth, your overall portfolio, you're not having all your eggs in one basket and one different thing. And that's where the gold and silver conversation comes into play, that it is wise to have participation in both gold and in silver. With the AI trade that's happening right now, with the technology that is used inside of silver, it is forecasted that silver has extreme upside. All of the major, large banks, the Goldman Sachs, the JP Morgans, they're all forecasting substantially higher silver prices just due to the shortage that's out there. But also gold being that stable wealth that we've seen for thousands of years. It's not uncommon, Joe, that we typically see a portfolio come in and have about a 70% silver allocation to a 30% gold allocation, a chunk of assets, not just a small little portion, but we're talking a chunk, and that represents between 10 to 20% of one's overall retirement portfolio. But that's historically, Joe, what we have recommended, what we've seen, and it just continues to prove itself time and time again now, especially with the new advancements in technology and the need that silver has to fill those roles.
I would say this whole conversation today has been talking about a world shift. And
Hmm.
as a viewer right now, you can say, well, it's just the down market. I've seen my 401k or my brokerage account go up or down. It's just another day if you really want to lock in on that. That's one way to look at it. We've been watching this for quite some time. and it's different this time. What I like to say is there's a change in perspective taking place. Um, just reading the headlines over the last couple of months. So we're sitting right now in the beginning of April 2026 for those keeping score at home. So this is dated material, but in the last couple of weeks, we've really seen some fluctuations that have come out of sort of nowhere if you're not really closely watching. A key motive behind uh, what some are saying is an improved outlook on gold and silver is this term called accelerating policy surprises. Tariffs are one of those things, some deregulation taking place. We're seeing a global demand, sort of repeating what we started out with today. There is a global demand increase of gold in large portfolios, as well as the large commercial banks who are not buying our debt anymore. That's not good for us as a country. And it's a big shot across the bow to say, why is everybody who knows something about money, monetary systems, buying gold? The perspective for lower short term interest rates and potential to hedge against accelerating policy surprises is prompting those in the know, as much as they think they know, to look at gold as a target. They're raising their perspectives on gold as a target for the rest of 2026. Even with everything else going on, major banks have become bullish. They're projecting gold prices to now go to that 6,000 to 6,300 range. Ryan, what say you? What's going on?
Well, Joe, I mean, there you have the powers that be, and you want to call it
Yeah,
those that are in the know or think that they're in the
yeah,
know,
yeah,
right?
yeah,
Um,
yeah,
I don't like to be a contrarian against these
yeah.
large forecasts, and the forecasts are not coming from guys and individuals like you and I. It's coming from J.P.
No,
Morgan, Deutsche Bank, Goldman Sachs, Bank of America, to say the few, and they're all
yeah,
forecasting by the end of this year, well north
right.
of $6,000 an ounce for gold, and dated material. We're right now in that $4,700 range. Um, it, folks, banks like that, the institutional money, the central banks, they're not buying gold and holding gold because it's a shiny rock or a relic. They're buying gold to deleverage risk. And right now our dollar is a very large risk and a lot of unknown. And that's why you're seeing these types of forecasts. And I like to say, Joe, and I'll turn this back to you, when you see the price of gold and silver rise, is that a good thing? Right? And for those that hold gold and silver, they'll say, yes, it is a good thing. And I will like to advise folks to change your mind and your shift that when gold and silver rises in value and everybody's forecasting it to rise significantly, that what that means is that just means your dollar just buys that much less. So it's one of those, it's a catch 22 for those that don't hold gold and silver. Yeah, that's a horrible thing for you. But that is why
Yes.
we have a chunk of our assets in metal as a protection scheme.
We have just a couple minutes left, and I want to go to talk about qualified money. Let's pull that slide up. This kind of defines it a little more. Yes, you can have a gold and even a silver IRA account. Yes, you can have a portion of your 401k assets going into the same thing. We all qualified money. You have to be very careful how you're moving from one account to the next, making that a direct transfer. But those are things that are done all the time. It's not unheard of. This isn't some new formula that Ryan and I have concocted, and we're going to take advantage of this. This happens all the time. Um, I recently personally set up a SEP IRA for myself with gold and silver. I eat what I cook, and the process is a sort of a. We talked about this before, a cadence, and you have to be careful as to what you're purchasing, with the guidance of your advisor and the gold and silver broker like Ryan and his qualified people. But there's so many areas to go with this one slide, and I'm going to start out with this, Ryan. So I have $100,000 in a 401k. I find out I'm an active employee. I can even take some of that money and transfer it to an IRA and continue to contribute to my 401k. I haven't broke employment. And there's ways to do that. That's one way to do that. Or it's an old 401k, an old IRA, and there's a portion, let's say 20%, what you want to take and move into these physical accounts. So this money's making its trip over to what we want it to do. Everyone has agreed to this. There's kind of a 3 or 4 step process that has to take place here, Ryan, and it takes time to do it the right way. And you want to make sure you're working with not only an organization who is the purchaser, like your house is, but then you also want to have this thing called a depository. Just take a minute to walk us through what that feels like for somebody that may not understand what needs to happen here.
Yeah. So if we're looking in the rearview mirror of what occurs, Joe, when a person has this block of money, let's call it $100,000, and they want to move that over into physical gold and silver, it starts a chain reaction. There are, some paperwork and some forms that Joe, you've walked through it yourself, right? You eat what you cook. It's not hard. It's not difficult. You fill that out, and then you submit that into my internal staff, and that starts that chain of reaction to transfer funds from your current custodian, where the funds are currently processed, into a government mandated custodian. We historically use a company called Gold Star. I guess pun in the name, right?
Yeah.
Once the funds are transferred, we then are allowed to purchase the appropriate amount of gold and silver. And that's when we also talk about that blend, maybe 70% silver, 30% gold. The difference here, Joe, between retirement accounts and non-retirement accounts, such as your non-qualified assets, is the government has deemed, and we've always done it this way, that it has to be stored for the client in a government mandated vault and facility. And we help facilitate all of that for them. So can you have physical possession of an IRA? No, you cannot. Some companies will say that you can, and that's why you need to work with a trusted company and a trusted advisor like you, Joe. But there are strict rules and guidelines that the IRS says it has to be held and custodized. Is that a word? At arm's length. Okay, meaning you cannot hold it. It has to be held for you. So, I mean, that solves two things for government. It's everything can be tracked, and then so everything can be taxed. Right. That's the whole role of a retirement account.
This feels like a lot going on. There's a lot of moving parts. There are a few forms where you're moving the money from. Typically, there's their set of forms that they want us to complete. Okay, that's the paperwork. Then there's our set of forms that we include this depository information in. So it's kind of a two-stop or a two-step when it comes to completing forms, which can be done all at the same time. Sometimes you have to facilitate getting you and your advisor on the phone to go directly to, if it's a 401k in particular. Sometimes some of our favorite big ones like to just have you on the phone, and they'll work with you that way. We have to have patience in doing this, but it does happen, and it happens successfully. The depository Ryan and his people have done their due diligence on is one of a few that are the best in the country. And I think the bottom line there today, Ryan, is you can't hold this in your hands. You should never hold it in your hands until you're ready to cash it in, take it home, pay some taxes on it, unless it's a Roth situation. So any other quick, got about 15 seconds left here. Any other things you want to say before we say goodbye to Ryan today?
Well, I would like to say, Joe, that, it's a great thing to sit down with an advisor to make sure you know your percentages, know where you sit. The world's changing, right? We just have to be aware of those changes so we can prepare. And that's really all it is.
And there he goes. That's Ryan Long, our insider on gold, silver, and pre-1933 gold and silver coins. What a great conversation. A lot of things to talk about. Let's go right to the wrap up today to kind of focus on what our action steps are. And there they are. Work with an experienced advisor, not only somebody that kind of knows the big picture, but somebody that's a specialist. We talked about having a specialist earlier. That's what we need in this particular case. There's a lot of things going on out there with gold, silver, pre-33 coins. Without going too deep into that, it's just good to make sure you're working with reputable specialists in that area. We also want to think about that 20% diversification. How much do I do? Do I take half of my portfolio and do this? Is this a buying time? Maybe I should just do this, move 80 or 90% of my retirement portfolio into gold and silver for the next 3 to 5 years because I don't want to be left behind. And this would really help me catch up. What we're saying is it's one of the tools, one of the strategies and solutions in the playbook. 20% is a really strong number to consider, and every case is different. So we would talk at greater length with you and your house, so to speak. And you know what? To be a great student, it's always good to see some good content. Go to my website. That's joesimon.solutions. Lots of stuff there, blogs, other podcasts on a lot of different things besides physical gold, silver, pre-33s. But once you're there, go to the upper right-hand corner and go to forms, and then scroll down to the fact finder form. You want to fill that out. When you see your physician for the first time in a long time, they always give you that form. It's 2-3 pages. They want to know your pulse, what's been happening. That's generally the same thing here. And that's a good talking point for when I sit down and talk with clients about this particular subject. We want to know the whole picture to really make some good thoughts and to offer some good suggestions. So that's really it for today. Hope you learned something. Really appreciate you allowing me into where you are today. And as I always like to do when I sign off, have a prosperous day.
You've been listening to the Joe Simon Podcast. Big ideas with powerful stories and real-time solutions. Business succession planning, executive benefits, employee benefits, tax beneficial savings, and more. Remember, information discussed here today is dated and not specific to your situation. Always seek personal counsel from qualified advisors. Joe Simon is a licensed insurance agent in the state of Wisconsin. Licensed to advise on accident and health, life insurance, disability insurance, and annuities, as well as qualified long-term care insurance.